Guys, what is up? How you doing? Welcome back to the channel. Today we're going to go over something that's going to address a lot of y'all's concerns. As you know, I focus all of my energy on creating passive income, residual cash flow, right? I want to trade my time, energy, and resources once, but get paid over and over for that work. If you're working for active or transactional income, you are never going to be able to retire, or going to be able to retire, but just not comfortably. And then after a few years of retirement, you're gonna have to go back to work because you're gonna blow through that money because most people miscalculate how much they had to put away. So here's the problem, guys. If you're working for active or transactional income, meaning a job, a check, wholesaling, flipping houses, as an agent listing houses, you're trading your energy, effort, and resources one time to get paid one time. And what does that do? It creates that pinch, that anxiety that you feel of when is the next check coming? We want consistency. We want to know that even if we get sick, hurt, injured, that if we stop working, we're protected financially. And that's what we're talking about today is cash flow. But I'm addressing a lot of questions we've had because a lot of you have commented below videos that we have, or you've reached out to us through social media and said, Connor, there aren't cash flow properties in my market. I'm in San Francisco, or I'm in Canada, or I'm in some high price point markets where our average sales price is $600,000, $700,000, $800,000. So where are you going to have to invest? We're going to talk about the cities or the area of the country, which is this flyover country. And I'm going to give you my opinion on this, right? So the reason why these areas of the country, Ohio, Detroit, Birmingham, Jackson, Mississippi, all these different little areas that are right there in the middle of the country, why is there seem to be more opportunity and more cash flow type of properties? It's because of the price point. And in my opinion, it's directly related to the income that is in those areas, right? So when you look at California or coastlines all around the country, that's waterfront property or it's a limited area. Let's take up here in the New England area, right? This was basically colonized first. A lot of people packed into a small area. They're not making more land. That's why they go vertical, not out. So here in DFW, what do we have to do, right? In areas that can grow out. Not only is it a good area to invest outside your own market into another market, but if you don't want to do that and you want to be closer to your rental properties, go outside your major city and start backing out into those secondary and tertiary markets, right? So here's kind of how this works, guys. The middle of the city, just put a dot in it, right? That is where the biggest banks are, the biggest buildings are, the highest frequency of fluidity of capital moving, cash moving through those areas, the highest priced jobs. This is where people are commuting to. As you get farther from the main hub of the city, you're gonna go into more rural areas. What does that mean? Less people, less jobs, less competition, lower price point properties, right? So a lot of y'all are in big cities and you're struggling against the competition. If you back it out, and guys, we have other videos talking about why you can go into secondary markets to find more deal flow and better cash flowing properties, you need to go outside your area and start backing out. So look at a dartboard, go out a few layers, right? That makes sense. Now, if you're on the coast or you're in these areas where basically they're building up and not out, you need to basically look outside your market, right? You can buy turnkey properties all across the middle of the country. There's a ton of turnkey companies selling these houses. And if you have the ability to get these loans or you have good money saved up, that is your best play. So as you get above $200,000 and $225,000, guys, it's going to get tough to make these houses cash flow for most markets. Unless you have really, really high rent rates compared to very, very low tax rates. And as we all know what's been happening, at least here in DFW and a lot of other markets, taxes have been skyrocketing, right? My cash flow dropped quite a bit last year. Pretty frustrating, right? A lot of y'all are feeling that same pain. So as you kind of go up to 300K and up, you're not in a market that's really conducive to building a successful cash flowing portfolio, right? Unless you really understand financing and really are buying properties right and doing creative things with them. So we want to move into price point properties, really I would say 150K or lower, really $100,000 or lower. Focus in areas in this part of the country, start researching online to find areas, turnkey companies, or other investors in those markets. You can go online and find them. You can contact meetup owners in those areas and say, hey, look, I'm from California, I'm from New York, I'm from Florida, I'm trying to buy properties that cash flow in these other markets. And just start trying to make those connections because you don't need a lot of houses to set yourself financially free. Now, before some of y'all freak out, anywhere in the country, you're gonna have micro and macro markets, you're gonna have sub-markets within those micro markets, you're gonna always find cash flowing properties everywhere. You're just gonna have to look harder. I'm talking about if you just want to hop on the MLS or hop on the internet and contact a turnkey company and get 2% on your money, not 2% return, but 2% as far as we calculate rentals, this is where you need to be looking, right? So guys, I hope that helps. If you're in a high price point, average sales price market, 300K on up, you're gonna have to go outside your market. And you gotta get over that limiting belief that you can't buy rental houses across the country, because really if you're putting a property management company in place, it's not that much more difficult to manage those houses or to look after those investments than if they're right there in your backyard. So unless you want your tenants to be your neighbors, who cares, right? So guys, if you like today's video or you have other questions I can help clarify for you, or any tips that you think I can help you with, let us know, contact us, email us, guys. And if you haven't already done so, you know what I'm gonna say. Smash that button down there, that red button that says subscribe. It's gonna help this channel, and I'll keep on putting out videos that are gonna help you with your business, guys. Have a great day. I'll see you on the next one. Have a good one.